Hey traders and investors, it's Serge Berger here. Today I want to have a look at the semiconductor space. Semiconductors can be a pretty good sort of indicator for risk on, risk off. And if I look at the semiconductor space here, the way it's been trading over the past few days has pretty much been in sync with the broader market, and just want to kind of give you guys a look at the semiconductor space via the Philadelphia Semiconductor sector index, and also by the SMH ETF. So let's have a look at this for a little perspective on what we could expect. Maybe get a little bit of read. And you can see the broader uptrend here from late 2012 is very much intact. And the question now really becomes if this is going to do something similar to what we saw in the Dow, or what we are seeing in the Dow, which is basically a breakout, fake out past lateral resistance. Okay, that's sort of this kind of thing, and we saw that last Friday. And now, and now we're basically back to churning below this area. So the question really is, if the 50-day moving average holds, if then the 100-day moving average holds, and if that doesn't hold, then we have certainly lower to go. So I think that's a pretty important perspective here. If we break below the 50-day, or in other words below the September 16th lows, then I think these guys have lower to go for sure. The active trader can already try to sort of get short. More tactical guys may want to wait a little bit. Let's look at something like Intel. We're going to go through some of the bigger names quickly, just to give you a perspective. Intel had all the reasons to try to break higher, failed to do so from that base, and now basically is breaking below that, breaking below its 50-day moving average for the first time in quite some time. Here you can see there's plenty of room to the downside for Intel here in the near term. You can even look at something. I know it's not exactly only a pure semiconductor play, but even Cisco, you can see, has a lot of bearish stuff going for it. If you look at this head and shoulders pattern with a bear flag, all this could potentially fill this up gap from May 15th down to its rising 200-day moving average. So you can see, if you kind of take this picture, and again I'm going to quickly go back to the picture of the SOX so you can kind of see this breakout, fake out move. If we then take the picture of the Dow and compare that, and it does look pretty darn similar. In fact, it's exactly the same chart. If you even if you squint, and you can see we're right down here in the Dow as well. If we can break below the recent lows, these things probably have lower to go through sort of a multi-week lens. So keep a lookout for semiconductors. See how they're reacting, if they're confirming or even potentially giving you a leading indicator to what the broader market's doing. Oftentimes that can be a pretty good indicator for the broader market, and of course for the semiconductor complex itself. Hope this makes sense, guys. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.